Hello, students. Welcome to week 2. This week, we're going to actually get into um, income, various tax forms, standard deduction versus itemized deductions, calculating actual tax. So, week 1 was a little more definitions. This week's actually kind of getting into some of the material. So, let me go ahead and share my screen. We will get started. So learning objectives. Use the tax formula to compute an individual's taxable income, determine the amount of deductions from adjusted gross income, commonly abbreviated to AGI. Calculate the income tax for individuals. Explain the basic income tax rules relating to business entities. And explain the basic income tax rules of capital gains and losses, tax planning considerations, and compliance and procedural matters for filing tax returns. So who must file? Taxpayers under 65, you gotta file if your gross income exceeds levels, even if no tax is due. And these are 2022 thresholds. These numbers will change a little bit year over year. Nothing overly major, but 2024 is going to be different than this. So you got single, MFJ, married filing jointly. It's going to be about double the single threshold. Married filing separately, living separately. And you got head of household, which is typically, it's going to be about halfway between single and married filing joint. So even if your income exceeds those levels, you got to file a tax return. There's other special situations we will get into right here. Taxpayer must still file even if gross income below a threshold if taxpayer received advance payments of the earned income credit. Pretty rare you see that, but it is one of the exceptions. Taxpayer has self-employment income greater than $400. That one you do see quite a bit. You get a 15-year-old who is mowing lawns for the summer. He probably is going to make more than $400. He should file a tax return. He has self-employment income greater than $400. Taxpayer who's claimed as dependent by another and has unearned income, think interest and dividends, income that you passively earn, greater than $1,100 or gross income greater than the standard deduction. And if the taxpayer owes the 0.9 additional Medicare tax, which typically is going to apply to people that make more than the number changes every year, but it's going to be about 160,000. Those people have to file regardless, but here is the assumption. Due dates. Get familiar with these. Not a bad idea to print this slide off. Individuals are April 15th. C corporations are the 15th day of the 4th month after close of tax year. C corporations can operate on a fiscal year. That's why the wording is a little bit different there. Partnerships and S corporations, 15th day of the 3rd month after close of year. So if they were a calendar year end, they would have to file by March 15th. 3rd month of the 15th day, March 15th. If the due date falls on a weekend or national holiday, due date is moved to the first business day following. If the 15th is on a Sunday, okay, you have to have it by the 6th. Extensions, 6 months for individuals, partnership and S corporations, and 6 or 7 for corporations. Reports filed with the IRS. You'll get familiar with all these, but 1099-G, that's gambling, W-2, I'm sure you're familiar with. INT, it's interest, you got miscellaneous, dividends, retirement. Well, we'll go over all of these, but this is another good slide to print off for your information. It's the formula for calculating income tax. If you were to compare this to a tax return, it's going to flow in the exact same order. It's just the tax return is going to have more lines associated with it, but the basic formula is the same. Start at income, take out your exclusions, that's how you get your AGI. Then taxable income, tax liability. We'll go over this in greater detail, all of these separate lines, but this would be a good one to print off or save separately or just have it handy. You can see we've got IRS publications helpful to go in and look at. Here, it's a 2022 tax return, so it's going to look slightly different than a 23 or a 24, but it's going to be substantially similar. Slight differences, but not to that formula, more to some of the things you'll see listed. Other slides for your information. So starting at the top, total income. Any income from whatever source derived. If you earn income, you should pay tax on that income. Includes both taxable and non-taxable income. Does not include return of capital basis. I believe we talked about that last week. You know, if I have a piece of property that I paid $700 for and I sold it for 1,000, I don't have earned income of 1,000. I have 300. I have 700 basis, sold it for 1,000. I paid gains. I paid tax on the gains, that 300. Gross income items per section 61 of the code. That is the IRC, Internal Revenue Code. You've got wages, business gross income, gains from property sales, interest, rents, royalties, dividends, alimony through 2018. And after that, so if the Tax Cuts and Job Act, you don't pay income on alimony. Annuities, life insurance proceeds, pensions, partnership income, IRDs, income with respect to dividend, trust estate income, exclusions. You know, these are all things you're not going to be tested on every single one of these. It's helpful to know what constitutes gross income, what constitutes exclusions. You know, I'm not going to have a quiz for you that say what is alimony income? Is that part of taxable income? Is it not? It's not going to be that. It's just helpful to know what everything is, and got it listed out here. Exclusion, you got gifts, life insurance, welfare. I'm not going to go through all these, but you can kind of, I think we will stop it there for video one and continue video two.